All right. Good morning, good afternoon, good evening, everybody. Welcome to the Inner Circle live pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we could take advantage of in this Forex market. So, without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, especially today, and let's make sure that we participate and engage. So right out the gate, if everybody can hear me loud and clear, please drop me a one in the chat, as I did have some technical difficulties this morning. So I want to make sure you all can hear me. Good morning. Neat. Good morning, Kay. Good morning. I see everybody. I see the ones coming in. Okay, so I am good to go. And yes, let me make sure that everybody has control over their microphone. Right. We are good. We are good. Okay. Right. So let's exit out of this and go over to the credo, right? The foundation. Make sure that every morning, each and every day that we trade, that we are taking massive action, right? Accepting all possible losses before entering a trade, preparing you for any outcome. Make sure that we center ourselves, right? In body, mind, and spirit, ensuring a balanced approach to trading. Make sure we trust in our education, our strategy, our trading skills, and intuition. And let's imagine our trade successfully materializing. And also, let's make sure that we obey our trading strategy, avoiding decisions based on greed and fear. We all know that it's tough to do, but we have to do it. And let's make sure that we are never looking back or stopping once our trade has commenced. All right. So, right out the gate, Ryan, good morning, sir. How are you?
Bro, I am doing well, man. Doing well. I'm fired up, dude. Ready to go today.
Awesome,
Uh,
awesome, awesome.
yeah. How are you?
Doing great, man. It's Friday.
Yes, sir. Yes, sir.
it's,
Yes, sir. Yes, sir.
It's Friday. Got another awesome playoff weekend coming up in football. I'm a big football fan, so I'm ready to go for the weekend. Yes, sir. So, let's click over real quick. Take a look at trading economics. Man, we got UK retail sales came in, right? The sales fall the most in nearly 3 years. UK retail sales fell 3.2% in December, following a revised 1.4% increase in November, and worse than forecast of 0.5% fall. It was the largest monthly decline since January 2021, as sales decreased across all categories. Year over year, retail sales was down 2.4%. All right, so we know, from your training, one of the key indicators that we like to take a look at, retail sales, right? So that's important. Here, plan, right, Ryan, to the Bank of Japan, right? The Japan inflation rate. Okay, that came out 12 hours ago. I was reading this, and during the evening yesterday, the inflation rate drops to 17-month low. Right. So, what do you think, Ryan? I'm thinking they're not going to budge on that on raising rates.
Not yet. This plays
Yeah.
kind of right into their narrative.
Yeah.
So next week, when it's time, I don't think that they go anywhere.
Yeah. I don't think so. I don't think so either. Checking in, taking a look at the DXY, right? Take a look at this. So the DXY held around 103.3 on Friday and was headed for a weekly gain as the strong U.S. data and hawkish messaging from the Federal Reserve officials tempered expectations of an interest rate cut in March, right? So data released on Thursday showed the initial jobless claims unexpectedly declined to 187,000, the lowest level since September last year. Earlier data also showed that retail sales rose more than expected in December, right? And then this is what Ryan was alluding to earlier this week, and we actually posted a link um, for Fed Governor Christopher Waller, right? We posted that link. He said he pushed back this week on aggressive policy easing, saying that the United States economy strength give policymakers the flexibility to move carefully and slowly. So now markets are pricing a 57% chance of a Fed rate cut in March, down from the 75% a week ago. And as we remember, before a week ago, when we were coming out of last year, it was a 90%, right? So the strongest buying activity this week was seen against the yen, and as easing inflation in Japan priced out any chance of a shift in Bank of Japan monetary policy soon, right? So far we've been right on it this year in regards to the Bank of Japan and all the work that Ryan does, right? So overall, still long against the yen for the most part. So we've got those fibs in the upward direction, and we look for corrections and then C to D moves. All right. Any questions on anything fundamentally? All right.
No,
So
sir.
all right, cool. So let's take a look at the charts. I know we had posted earlier in the week the was the Aussie dollar trade. Take a look at that real quick. And that setup is moving pretty good, right? So on this sub-fib move to the upside, we just hit a D extension. But the overall move on the 1 hour, we're trying to get to that TP1 at 382 level, 66.33. And we're progressing nicely, right? So that one is continuing to move along. So congrats if you are in that trade and you are holding that position. All right. Also, what have we been sitting on for quite some time? This CAD Swissy setup is moving along, right? So here we are on the 4. And we're trying to work our way. Get everything to flash here. Oh, that keeps disappearing like that. Ryan, have you looking at your? I know you were busy yesterday evening, but look at anybody in the group, your charts. Did you guys catch gaps? I think they had an issue last night with the charts.
So
So
I saw
yeah.
gaps on just on the yen crosses are the ones that I've seen gaps on so far.
Okay. Yeah, something like
Yeah.
I think the dollar index gapped up. Uh so something must have happened with their feed and their servers. Um but yeah, I did notice that. But it's fallen in line this morning the way it should be. Based on the ones that I looked at, I went over to my trading view charts and it looked like everything seemed to be back on track for the most part. But not sure if anybody else had that experience. I know I did. But yeah, so this is the cash switch, right? And so we were taking a look at this B boundary level. Benny said he did too. Okay, so it wasn't just me because at first I'm like, man, is it? I was having technical issues in other places this morning, so I was just wondering if it was something on my end or if it was overall. But here's this cash switch, right? They take a while at times, right? The Bulls and the Bears have to fight it out. But this 80-20 zone is a good place to catch, in this case, to catch bids to the upside. So this is moving pretty good. Out of the zone. That is up 140 pips. The target is 339. So of course, right, we're gonna wave up, we're gonna wave down. Here's the 15-minute that we were taking a look at and drawing up some different scenarios on this cash Swissy. We didn't get that deep pullback, but we got it to a 382 and then it bounced, right? So whereas I love, right, and the way my trading plan goes, I love these deep corrections like we had on this AB boundary and this pullback. But here, right, we didn't get it, right? So if I was looking for an initial trade or to add to my cash switch position using my 15-minute chart, I have to stick to my trade plan, right? I didn't get my zone to price didn't reach my zone. So it is what it is. That one's taken off. That one's looking like it's probably going to make it through to that D extension. So that one would have been a no-go for me. Might have been different for some of you, right? Some of you might play the 382 with structure and the trend line break, right? But the point we like to make to find consistency, you have to make sure that you put it in your trade plan, right? So like right here at this 382 level, we had the previous B boundary, which is resistance. We had structure to 382. So some people may say, I'll take that off of a trend line break and put my stop right below the low or below the C and take that. But that's not my thing. So I'm not around the charts enough for that. So that's not my play, right? But as far as getting the overall direction right, which is half the battle, if not more than half, we are doing pretty good so far on that cat Swissy. Any questions on that? No?
No, sir.
All right. Some others we put a UJ scenario in. I want to take a quick look at that because we know overall we're bullish, right? We just talked about that with the yens, but on this 1 hour chart, we're in a position where we may see a correction. So there's a gap right there, right? On this dollar yen. But hey, looking like, right, we got price stalling out in that 80-20 zone, which is like what we like to see. And we got some downward momentum this morning. So we'll see how that continues to play out, right? We know that if that occurs, that could take a while. That's 253 pips. So we'll see if we can get that to happen. That's, of course, using a wide stop. Again, if you want to use a tighter stop above your high, what I like to do there is make sure, right? We're talking about entry techniques right now, right? Which Ryan covered really well inside the new training, okay? Talk about these entry techniques, right? I either want to, use my trend lines, okay, to where I'm trying to get my trend lines to run through the highest point in the trend, which this was my high point here. And we can see where price broke that trend line. And I'm either looking to take it aggressively off of a trend line break. We got a bearish candle close there. So maybe I play my entry there, or maybe I'm the type of person that wants to wait for price to move down. Okay. Move down. And then pull back, form a low and then pull back. So I could put a fib on there and wait for it to pull back to my level. Okay. So aggressively off the inner trend line break, stop above the high if you like tighter stop losses, or hey, I want to see this drive down, break through some levels and then pull back, and then I'll look to take it from there, right? Everybody follow me on that. Drop me a 1 in the chat if you do. If not, say absolutely not, and I'll explain it again. All right, I want everybody to get that so far, okay? So there's only a few things that we do, right? We trade our sweet spot zones, and then we determine how we want to enter. So when we're always, again, we're going to post it like this for the most part, but you guys have to know from the training and what we cover that there's multiple ways to enter that trade. You might use a cloud, right? You might put a cloud on your chart, either on the current chart that you're trading or drop down a chart 15, 30 minute. Oops. And you might put your cloud on and say, I'm going to wait for price to break the cloud, and be more conservative, either on the 1 hour or the 15-minute or 30-minute or however you want to play it. But same thing over and over and over again. That's how we approach this thing. Real quick, because there's some things that I want to get to this morning. As far as some math, right, and helping you guys calculate some things. Any particular pairs that you guys want to take a look at? I got time for like 2 or 3. No, we took a look at this Euro NZD as well. So let's see that real quick, right? We know that's moving bullish based off the higher time frame, but we're stalling out a little bit. We almost got to that stop, right? But now we're ranging a bit. So we'll see, right? If you're not involved in this yet, I would wait for that to push through some lows, maybe. to see if you can get involved with it. Maybe some additional confirmation. Euro Aussie. All right, let's take a look at it because I am currently not in it anymore. I played that 1 hour fib, but there was a larger move on the 4. So let's see what we got going on. Oh yeah. All right. All right. So Euro Aussie. Okay. We said, hey, we broke through inner trend line, entered the outer bullish move. ABCD way completed on the lower time frame. And now, right, we're looking at the possibility, maybe a deeper correction, but we're stalling at 164.79 right now. Here we are on the 4. This is the 4-hour look that I had on it. Let's bring in the right fib. Here we go. Right. So a longer term C to D move there. Look at the impulse leg again, into the outer trend line break. And now, right, we're moving. Okay. So this is where we are on the 1. Now, my last play was this C to D move that occurred. So now that's finished. I could take this out. So we're looking, hey, if we want to continue bullish, then we're right at about this 50% level, and we got that 164.79. So what I would say on this is not as deep as I would like it, but we do have a 50% restructure. Right? So the way I like to play this is that I either put your cloud on, or I would like to see, okay, if it's going to hold at that level and break trend line at this 50% level, then I would love to see it move and then give me a pullback. Then I'll look to take it from there. Right? You can take it aggressively if you're off the trend line break. But when I know that I don't have it deep in my buy zone, but I do have some structure, I typically like to see if I could get a break and a pullback, right? Maybe if you drop down to your 15-minute even to see if you can get that to occur. But this is the overall thought process, is that I want to see it break and I want to see a pullback potentially to a key fib level, right? Because I didn't get it on the capital fib, but if I can get it on the sub fib at the price coming in the structure 50%, then I'll look to take it. So that's how I like to play that. Or you could put now when I do that, right? When I do that, because I'm taking it higher than I typically would take it, then I'm gonna put that stop loss here, right? So pretty much under your C low, right? Or underneath the A of this sub fib. That's how I'm gonna play that. And that gives you protection, right? To where I get stopped out. If it pushes lower, then hey, it can move lower. I know I'm within my capital fib, and it's just going to push deeper into my zone. And then I'll look to do the same thing later to get in on a position. So it's long. So that's how I would play it. Considering overall period, would you put a stop below the capital fib? If I'm taking it from this level and I'm waiting for these confirmations, then I'm putting it here. If it moves deeper into my zone, then yes, I'm putting it below my capital fib. I'm putting it below my capital fib. And I'm working my risk from there. But if it wants to accelerate, because remember, right, for my trade plan, I like 61/8 or deeper. I'm at a 50 with some structure. So I just want to use some additional confirmation. So yes, I'll put it below my A, but on my sub fib, right? Because I'm good and protected. That way, if it drops lower, then I can look to get another position, and then I can put it below the A of my capital fib. That makes sense? Make sure I'm clear on that.
Yes.
All right. Awesome. Awesome. All right. So let's look at let's look at gold to see what's going on with it. All right. So this is gold on the 4, right? We got that push down. See how it came into, right? How it pulled back again, and it's just kind of retesting that level. But right now, you have to say, right, on our current 4 hour, that's bullish. This is still within the AB boundary, okay? And we were talking about this a little while ago, right? How, hey, you can put your stop below the C or below the A. If you've got your stop below that C, right, you're still good. You're still good for right now. Here was the consolidation and the breakout. And you can see how this is pushing long, right? This is pushing long. So still overall for the swing, I'm bullish on gold. I'm bullish on gold. I mean, we're in a potential rate cut environment that typically bodes well for gold historically. So when I'm looking long term, and that's what I tend to look, I'm looking long on gold right now, and we're bullish, right? So we're holding it, pushed deeper within this zone, but we're still holding that area. And right now we're getting some bullish momentum. So if I like here, this is my 1 hour that I was tracking, right? See, I pushed down for a deeper correction, right? And how we talk about, well, in the past, how we talk about a lot of times when your higher time frame gets a deeper correction, right? It'll it'll move and take out some of your other fibs that you may have running. But this one actually stayed within the AB boundary and it pushed down deeper. But look how it's correcting, right? So eventually, right, if this moves and continues long, it'll take that A out, right? So this is just playing, right? You see here how this was starting to move up, and then it came down for a deeper correction on your 4, but on your 4 hours, still within the AB boundary. But when your A gets taken out, we flip the fib over. So what'll happen is eventually, if this continues long, over the long term, okay, and you can run it that way now if you want to, if that's your overall bias is long. This is eventually going to take this A out, okay? And it's going to continue to make ABCD waves, right, to the upside, like so. Okay, it's going to continue to move long. If I've got that, if my idea is correct off the 4, right? So you can even here, you can see this trend line break. So if you're saying, you know what, I'm with you, Benny. I think this is going to continue long. Then, right, you could say, I'm just going to run it long like this now. And if I get a pullback, right, then I'll look to take it like so. All right. Yes. You can see where that trend line break occurred off that last move. Okay. So if you like to trade gold in your smaller waves, that's what we're looking for. Now, if it pulls back to your zone, okay, like so. Oops. Just stop below the A, right? And this is going to be a setup. Right? Back to your 61.8 level. Like that. So you may say, like, right, I'm just going to play the smaller wave, right? And eventually, on this 1 hour, like I said, if we continue to move long, then this will flip, right? This will flip. And then, right, we could continue to trade long, right? Some people, they just use their overall bias, right? And they don't do that. I like to kind of leave that active until it takes it out, just to so that just the way I keep track of it. Because technically, right, this A got taken out and those fibs are running to the downside. But you may say, look, my overall bias is long. I'm just going to start running my fibs now to the upside on all time frames, right? And whenever it takes out the A, it takes it out. So it just depends on visually how you like to see things, right? I just know that it made a deeper correction on the higher time frames, which took out my A on the 1. So technically that down fib is still active. But I do expect it, if my gold idea is correct, I do expect it to continue long. So however you set your charts up visually to make it make sense for you, it's cool, right? Because technically we've got this we've got the trend line break here now too. So if running fibs in a different direction, depending on the time frame, confuses you, then just run them in the direction of your overall bias, okay? Which for me is long. So it would look like that on the 1-2. We don't have a new fib yet. Does that make sense to everybody? Yes, no? I want to make sure I'm clear on that. Sometimes it comes down to just preference.
Yes, it does.
All right, cool. Okay, right. So that's where we are on gold. So we had EA and gold come in. Right. Anything that you're particularly keeping an eye on?
No, sir. Just the ones that you posted. And I'm just trying to just stay tight on the fundamental side of it to understand how
Yes.
we move out of this beginning of the year phase. So that's it that I have for right now.
Okay. All right. All right. Oh, and I had clicked on it, but I didn't go over it. We were talking about this this Euro USD yesterday. That it was coming into some levels, and it is moving pretty good. It's looking like, right, it's one to move up. And because we were talking about it on the 1 hour perspective, to where we got the 80-20 to play out to the downside, and we were sitting at that 61.8 level, we may get a reaction. It double bottomed. And it's been pushing long. So coming out that yesterday, if you guys dripped a trade in, you'd actually be in profit right now, right? If you drip the trade in, or if you're waiting for the cloud to break, you can do that too. But we've gotten some positive momentum off of that, off of price moving up. So we can see how we broke it, and then we came back to double bottom. So you can see how you kind of have that that W type formation setting up, right? To where we may get that further upside move, right? So yeah. So early position on that would have been good, right? Would have been pretty good, 30 something pips. Or you can wait to see if it breaks cloud if you need that additional confirmation. All right, so let's see how that plays out. But we got a good little bounce off that level. So that's the Euro USD. All right, so one of the things I want to talk about today is that we spend a lot of time talking about risk management and how important it is. So we just want to move to the next phase. As we know, a lot of you are either trading for prop firms or thinking about prop firms, or even trading your own account. The cool thing about prop firms is not just that they give you some money to trade or whatnot, but it helps you develop some good sound discipline that I hope you all would apply to your own accounts, right? In that regards. Now, we know different prop firms and things that like that have different rules and different parameters, but the overall thing that we need to look at that they all have in common is that they have what? They have rules, okay? That they follow and they require you to follow in regards to risk management. So this morning, for the last 30 minutes or so, I'm going to make sure that we do a little bit of math. If everybody is okay, drop me a 1 in the chat. And we can do this. All right. But I want to make sure everybody's good with it. For those of you some of you may have it all figured out, but for those of you who don't, want to make sure that we start to get some things figured out. And like I say, not just for props, but for your own accounts as well, right? If you're trying to grow a small account, things like that, or even if you have a lot of capital in your account, it's important to have the proper expectations. Okay. All right. So looks like we're all good with that. So let's talk about it, right? So let's click over here to the Fivers, one that we love, and this is their hyper growth account, right? So it's kind of instant. It's like, hey, I don't want to do a boot camp or anything like that. I pretty much have my trade plan. I've got some experience trading. I just want to jump right in, go through one level, and keep it moving, right? So we're gonna do it on the 5,000 account. Okay, so we look at this $5,000 account here, and it says that the evaluation target is 10%. The stop out level overall is 6%, and the daily pause is 3%. So half of the max stop out level. Everybody following that, drop me a 1 in the chat. I want to make sure that we are good on that. Okay, right. And all of them are similar in regards to the categories that they have. All right. And then the leverage is 1 to 30. It costs you $260, right? So at $5,000 at 6%, right? That's $300, right? So that's pretty much your buy-in, right? Right? That's pretty much your buy-in plus an additional $40, right? The magic occurs with prop firms and how you can scale. That's what the magic is, okay? So 6%, 3% daily pause, 1 to 30 leverage, okay? So as we scroll down, right, and now they'll double every time you hit your 10% target, okay? So we take a look at a level 1, okay? $500 is the milestone, 50% payout, $15 bonus. Then they double it, right? They double it to 10,000. Milestone target is $1,000, right? So you can see it doubles, right? And you can do this all the way to 4 million. It's a beautiful game, right? When you think about it, because when you think about your own account and being able to double and scale, right? Sometimes that could be tough, right? So $10,000 here for level 2, $1,000 target, 75% payout, $25 bonus. Okay. So we know that the max stop out level is 6%, right? So say we've already hit our $500 target. We're gonna do some math, and now we've got 10% is the initial balance. Okay. Max stop out level, which is something that I really key on, right? Not only my own account, but props and things like that. So if the stop out level is 6% and the balance is 10,000, somebody tell me what my stop out level is. How much money can I lose? $10,000 account, 6% stop out level. How much money can I lose overall before I blow this account? $600, right? So that's $600 is what we're going to focus on, right? Because this $10,000, right, that represents a little bit of leverage, right? And I hope we have some aha moments, right? For those of you who've been with us in the group for a while, right, you know this, right? But I hope we have a good reminder, some aha moments that we can't get too focused on this $10,000 and taking 1% of $10,000 or whatnot, because that doesn't give us a lot of room to play when our max stop out level is $600. See, this is a great evaluation, right? In regards to how you can manage risk. That's what it's all about. Not so much what you can gain, but how you manage the risk. So $600, okay, is the most you can lose, right? Before you blow this $10,000 account. So we have to really manage this. So we're gonna do some math, because if I need to make $1,000 and the most I can lose is $600, can somebody tell me, right? How many trades, right? Sometimes that's what we want to know. And sometimes this gives us the proper perspective. How many trades is it going to take for me to hit this $1,000 target? Does anybody know? Has anybody ever figured it out? No?
This is a beautiful question, bro.
Yeah. Right? Like how, like what is, because we get frustrated, right? We lose 3 trades, 4 trades, 5 trades. Like, oh my God, this is ridiculous. My strategy doesn't work. I'm jumping to this next strategy. I'm putting 12 moving averages on. I'm using the cloud. I'm doing all this stuff. The world is coming to an end, right? So no, right? How many trades, right? And in order to figure that out, we can't figure it out right now based on what we have because we're missing some variables in this thing. We're missing some variables in this thing. So we are going to show you, right, the way we work through, right? Because yeah, we're going to show you how we work this math out. And this can be used for your own account, right? The loan product. We're just using products because they have a good framework that we can go off of. So we're going to say, all right, we've gone through this level one, and you can use the same math to actually figure out how you're going to hit your $500 target at that first level. We're just going to skip to level two, right? And I'm going to show you guys how you can focus on this $600, and we want to grow. We want to add an additional net $1,000. That's pretty much what we're doing. So okay, so this is how we're going to do this. All right. So we're not going to look at now. You can work your risk off. Some people work their risk off to 10,000. I don't, because I like to keep it in this proper perspective. If I blow the $600 to 10,000 doesn't matter. So we're gonna say at level two, our account size is $600. $600. Everybody clear on where I get that account size from? Yes or no? Want to make sure that we're good.
Yes.
Okay. All right. And this is how, right, we keep things in this proper perspective. Okay. So the total net profit required, okay, total required net profit for that level is $1,000. It's $1,000. Okay. So one of the variables that are missing, and that comes down to our trade plan, is our risk to reward. That's how we're going to figure this out. So we're going to do this. We're going to say 1 to 3, right? Risk to reward. Okay. So our risk to reward is 1 to 3. So for every dollar I risk, I want to make 3, right? And we know, right? A C to D move, no matter what the time frame, we can get a 1 to 3, depending on how we do our stop and how far we carry a 80-20, right? We could do a 1 to 3. We're just gonna say a 1 to 3. We're gonna make this math simple. Now on the $600, okay, we're gonna say, right, another variable that we need to figure that out is our risk per trade. And we're gonna say, right, because overall it's $10,000. The account size, right? We're using 6,000 because that's the max drawdown. We're gonna say 5%. All right. Now, Jeremy, right? You like to use the 4 consecutive loss rule, right? If I'm not mistaken. You use that on a regular basis.
Yes.
Right. So if we were to lose 4 consecutive trades at 5%, we want to make sure that we cut that in half. We can use that. Our risk in half until we get back to where we need to be. But that's a story for another day. So at 5%, somebody tell me what 5% of $600 is. $30. That's it, right? 6 times 5 is 30. So 5% equals $30. Right? $30. That's going to be our risk per trade. Now, So if we're risking 30 bucks per trade and we're in a 3-to-1, somebody tell me what my reward per trade is going to be.
90.
90. On it. All right. It's going to be 90 bucks. Okay. So that means that if I'm in a 1-to-3 risk to reward, and let's say if I'm in a 1-to-3, let's say I only win 30% of my trades, right? You guys see how you got to do the work on the charts and start to build out some probabilities, right? So your win-loss, we're going to put W/L probability is 30%. Low end. I'm not that good at this thing yet, right? So we're going to say that that's 30%. We're only winning 3 out of 10 trades, but we're in the 3-to-1. We know that we can make money. We're in a 1-to-3 risk to reward. We know that we can make money. Okay? Everybody follow me? Yes, no? Let me know. Okay.
Benny, is the probability because we're doing 1-to-3?
1-to-3.
Okay.
We're doing well. We're saying this low end 30. We know that at minimum we need to win 3 out of 10 trades. Only have to win 3 out of 10 trades to make money, right? So your win percentage might be 40, 50, 60, 70, 80%. You get what I'm saying? So I'm giving you worst case scenario. Follow me?
Yeah.
Okay. So if I only win 30% of my trades, because I know if I'm consistently in a 1-to-3 risk to reward, right? That I only have to win 3 out of 10 trades. I only have to win 30% of my trades to make money. Okay. So that's where that's coming from right now. Your win percentage can be higher than that. Okay, which that's a plus. So what we need to figure out, okay, and this is the key, is we need to figure out our expected value per trade. Okay. And this is coming from the Forex trade room, right? And the research that we've done, okay? Things that we've gone through. All right. So in order to get our expected value per trade, we want to take, here it is, okay? And we'll create a video on this as well in the training to add to our risk management, okay? So we want to take our win probability, okay, times our reward, minus our loss probability, okay, times the risk. Okay. Then we want to divide that. We want to take, so once we figure that out, we want to take our total required net profit, which is $1,000. Again, total required net profit. Okay. And we'll divide that by the expected value per trade. Okay. That's how we're going to do it. Okay. So let's do this. Our win probability is 30% in this scenario. So 30% times our win probability times our reward, which is $90. $90. And that equals 90 times 30%. equals 27 bucks. All right. 27. Everybody follow me on that? Drop me a 1 in the chat. Okay. All right. So we got that so far. So that's going to be minus our loss probability, which is 70%. 70% times our risk, which is $30. And that equals $30 times 70% equals 21. Right? $21. $21. So we're going to take that 27 minus $21. And that equals $6. That's our expected value per trade. Now, the second half of the equation is we have to take our total required net profit, which is $1,000, and divide that by 6. Somebody tell me what that is, please.
$600.
$1,000 divided by 6. What did somebody say? I broke up. Broke up a little bit. Somebody said something. I'm sorry.
Oh, so I think she said 600.
Okay.
No, I'm wrong.
That's all right. That's all right. We appreciate the participation. Right? Bernice said around 150.
166.
166.6, around at 167 trades. It will take you to hit that $1,000 target with a 30% win rate. At 30%. So that means that the better I get at filtering my trades, and say my strike rate goes to 40%, my win rate. So let's do this. Win rate. At 40%, be about 56 trades. At 50%, about 33 trades. 60%, 24 trades. And at 70%, 19 trades. Does this help anybody?
Yes.
Okay. This is how it all comes together as far as risk management goes, right? And we've been gradually working our way towards this, right? They wanted to bring this into the group, as we all continue to evolve and you guys are starting to get better with your technical and your fundamental analysis. Like, well, how do we bring it all together on the risk management end? Okay. So you do not have to blow your accounts. You don't. And Ryan and I have back tested and reworked and worked, right? It's been crazy, right? The amount of stuff we've done, but this is how you have to see things. So you can't get overwhelmed when you lose a trade or 2 trades or 3 trades, right? If you understand, right, and this is why journaling and keeping the journal and really understanding, right? It talks about over 100 trades, over 50 trades, like understanding your numbers. Everybody thinks it's about the candlesticks, right? It's not about the fundamentals or this ultimate strategy. We've said it over and over and over again. It's about the math. Right, Marshall, realistic expectations. Exactly. Right. So that's how you can take that, because I'm not focused on the 10,000. Right. Now, no matter what level you're at, okay, and you guys can see the math is about 5. It's just like, I'm a bit of a geek, but right, with math, it's about finding patterns. You guys see the pattern here, it doubles. Right? It doubles. They tell you that. That's easy. It's doubling. But look what happens. 10%. Look, it doubles. So does your targets. Okay? And then that's 6% for your stop out. Your maximum daily, right, is 3%, half of that stop out level. Right? So if I'm risking, think about it. If I'm risking 5% off that 600, that's 20 trades to blow the account. If it's 20 trades to blow the account and that max stop out level is 6%, that means for the daily stop out, right? I can't be in if I can't be in no more than 10 trades. If I'm in 10 trades, right, I can hit that daily stop out level the way we play the swing. So I would say, but hey, I'm in no more than 5 trades. So not only do I guarantee that I'm not going to hit the daily stop out level, I'm not going to blow the account. Right? Think about that. This is how you flip money. They start you out small for a reason. So when you look at this, if you develop this discipline and get time out of your head, right? You get time out of your head. By the time you get at 4 million, at 6%, right? $4 million, what is that? 240,000? Something like that. Yeah, 6 times 4 is 24. Yeah, 240,000. And you can have multiple accounts, right? I think. Am I correct in saying that, Ryan?
Yes.
Okay. So don't you want to go through the levels and develop the discipline to where it becomes more automatic for you? To where things become black and white, right? And you know exactly what you're doing and you're plotting out the path and how you're going to get there. That is the sweetest part, Jerry, multiple accounts. And you can turn it into a business, right? So there's more prop firms out there than the Fivers, right? You just have to work the math out, right? So when you take what we teach in regards to our sweet spots, Okay. And what we like to trade, right? You're not going to lose 20 trades in a row, right? You can drop that to 3%. You're not going to lose 33 trades in a row, right? But we know that at worst case scenario, if I come in at 30% with a risk to reward of 1 to 3, and I'm risking 5% on that $600, right? And if I lose if you lose 4 consecutive trades, you may say, like Jeremy, the 4%, the 4 consecutive loss rule. You know what? I'm gonna cut my risk in half down to 2.5% until I work this back up, right? And then you stay in the game even longer. But the basic math, right, is that hey, if I can get that strike rate to 50%. At a 3-to-1, and you can do the math. You can rework it off of a 2-to-1 if you want, right? We just gave you the formula, the Forex trade room inner circle prop firm math, right? But the magic in it all is that you can use this for your own account too. Okay, so I know if I can get it to 50%, right, my strike rate to 50% consistently, I'm gonna hit a level in 33 trades. If I just win half of my 3-to-1s, meaning that I'm gonna take less trades and I'm gonna stay in my trades longer because I'm looking for 3-to-1s, right? The numbers don't lie. They don't lie. And it doesn't matter what level, right? You can go all the way through these levels and work this math out because it's pattern driven. 6% is 6%. It doesn't matter what the level is. It's gonna come out to the math is gonna be the same for you based on your win rate. Your strike rate is what I like to call it. If you're 30%, it's going to take you 167 trades. If you're 40%, it's going to take you 56 trades. Right? If you're 60%, it's going to take you 24 trades, right? At your 3-to-1, right? Now we know that can vary a little bit. Maybe you get in a trade and it's 2.5, 2.81, the way it finishes out, 2.85, whatever. But your basic formula to give you a barometer, right? A gauge in which to measure yourself by, which this is what's important over time. That's why they're lying to you. It doesn't happen overnight. The Lambo doesn't come overnight, right? So, but if you just work your math and you stay diligent and you stay disciplined, you'll get to your targets. That's all I got for today, everybody. This makes sense to everybody? Yes, no?
Awesome.
Thank you, sir. All right. So take your screenshots. We will make a video on this, right? And put it in the training. Right. But I wanted to make sure, right, that there's a couple things we wanted to make sure that we did to start the year. Right. As we move towards some things. We have a pretty good relationship with the fibers. That we're looking to grow some really good things coming right in the very, very near future. But we wanted to make sure, right, that for our group, it took 20 screenshots. For our group, we wanted to make sure, right, that we get our math right and set the proper expectations. So we're not getting mad if we've been in a challenge or if we're trading our own account and it's been 30 days and hey, I haven't seen, a whole lot of movement. That's all relative, right? It's all relative. So one goal achieved for this year. Yeah. Yeah. Mastery on risk management. That's it. Right? So that's it. Right. Anything before we close out, sir?
Bro.
I've been working on this for a while, right? Man, you've been going back and forth.
Listen, like one of our goals, right? Helping people become consistently profitable traders. But how do you actually do that? You do that with systems and processes that are step by step and do not change, that are consistent. The only way to be a consistently profitable trader is I have a consistent process that you follow time and time and time again, right? This formula is the system. You got the sweet spots, the system. You got the math, the risk management. A system does not change. That's our mission. So, like, when we said this year was a year of expansion, we have the foundation. Now we're layering these bricks on top, right? To really take us as a unit and anybody that chooses to come along on this journey to a completely different level. To a completely different level. So now it's about putting the work in, like Jeremy said, to master that system. Make progress toward the goals that you have for yourself by taking action every single day, learning from the experience, learning from the result to take one step forward. Masterful, bro. The only thing I have to add is community, right? I had some folks struggling to find the replays for these sessions. In the community, there's a space for YouTube replays, right? Originally, I was putting them in the live trade room circle, right, under the post for each session. Folks are having trouble finding those posts. So there's a section for YouTube replays. We're going to add the link there for each of the sessions. Now, give us a little bit of time each day. It might take a couple hours for us to get it posted, but we will get them posted there in the YouTube replay circle. Hopefully that's an easier space for everybody to find the replay so you can go there, find them, check them out, do the whole deal. If you aren't subscribed to our YouTube channel, also head over, subscribe to our YouTube channel because you can also find the replays there as well. All right. Hopefully that helps.
Awesome. Appreciate you doing that, Ryan.
No doubt.
And
Bro.
thanks for all the feedback, everybody. We appreciate
Yes.
it. Yep. All right. Well, hey, don't just count your pips, count your blessings. See you Saturday morning for the Forex Weekly Ritual. Bye for now.